Hey everybody, good afternoon. Futures Brizio here, just after noon on Friday, February 14th, Valentine's Day. So happy Valentine's Day for those of you that have a special someone, and hope you get to do something enjoyable. And it is Friday. So let's just jump right in before we get started. Make sure you smash the like button, subscribe to the channel. I'm doing this live, but obviously you might see it afterwards on the YouTube channel recording, so that's fine too. And if you have any questions, comments, leave them down below. So we had kind of a volatile week here, a lot of up and down, especially in the U.S. dollar with the all the stuff going on with consumer price inflation, producer price inflation, just stuff going on with Doge and the cost cutting, and so it was kind of a wild week. But you know, from a technical standpoint on the charts, things have held up pretty well. I did end up having a green week, probably not as green as I could have, but I didn't trade any Forex today. I've actually been out all day. I actually just got home. So I just didn't have time to really even sit and look at the charts for 5 minutes this morning. So be it. That's okay. You don't have to trade every day for sure. So let's just jump right in. We'll start with the dollar yen since that's what we're looking at. And you can see, again, what I had marked out on the 4-hour chart for the last several days is this zone way up here, which was kind of the, our last swing high before this low was put in down here. You can see we rallied all the way back up. And then yesterday, I guess was this yesterday or the day before? This was 2 days ago. We peaked out here. We've been going back down ever since. And from a standpoint on the daily chart, you can see I have this zone down here. And I said that, price probably would continue down, at least make it down into these lows. And I do expect that to still continue. So there's certainly more room for the downside. Obviously, there's probably not much of a trading opportunity now on a Friday. And, I'd like to see a little bit more of a pullback. But anyways, that probably won't happen today. But the bottom line is on the dollar yen, I expect it to continue down and to at least come back towards these lows, if not lower. If it breaks through here, then we could be heading much lower back down towards these lows. I think there's really nothing to stop it from a previous technical area until we get down into this area over here. So these are kind of the areas I'm watching, but anywhere between here and here, I'm definitely looking for short positions in the dollar yen. Swiss yen is kind of the opposite. So this is one of these things where it's basically being driven by the other currency and kind of neutral on the yen. So I don't think the yen is a big factor in either one of these or any of these yen crosses, because you can see the Swiss yen is going up, and this is kind of a flip over. We do still have this zone up here. This is similar to the dollar yen, in which we have an overhead zone that price previously rallied to and then sold off to new lows. And you can see where it's still heading towards that. So I do expect price will continue up. Now, what happens once it gets close or into this area, we'll have to see if it does, if it follows the dollar yen and it's just a little bit behind and eventually it rolls over, if the yen strengthens. But for now, I'd expect that we're going to see price come up at least towards this zone. If not into it, and if we get a solid break on a higher time frame, like 1 to 4 hour chart above here, then we probably will go, significantly higher. But for now, the area between where it is now and this rectangle box is definitely an area for at least short-term longs. Although I'd be a little careful coming into this big bearish candle here for you ICT traders, which I'm not a big fan of, to be perfectly honest. But if you want to talk about fair value gaps and, imbalance, this is definitely an imbalance candle. So we could see price come up and react from this candle. But if I grab my crosshair and look, we did actually come into the area of the body of this candle already, although not really at the halfway point right about here. Rejected it, now it's coming back. So I don't know if this is going to really do anything. And I would expect to see price kind of work back towards at least this area right in here, if not like somewhere inside this box. So again, short-term longs on the Swiss yen, and then we'll see what happens after that. On to pound US dollar. This was one that was really choppy earlier in the week, but it looks like it's got its foothold to the upside. And again, and I did mention this the other day, as crazy as the 4-hour chart looked, The daily chart was still pretty clear, you know, with higher lows, higher low, higher low, higher highs. Higher highs, higher high, and obviously a higher high today. And so I do think that on the dollar, on the pound versus the dollar, I think the key chart to look at right now is probably the daily chart, and just look for these, you know, pullbacks that last anywhere from, you know, 3 to 4 days where we get these pullbacks. And so we have an area now sitting right here. This is our kind of our last swing low, right? So this is the area that has to hold for the uptrend to continue. And so on this time frame anyways. And so in the meantime, you know, we get some kind of, you know, move, push back down, you know, some kind of retracement, whether it comes back to this area that was previous resistant, acting as support, or whatever, wherever it ends up coming. But we probably see, you know, you can see these retracements last anywhere from, you know, 3 to 4 days. And so you have to kind of expect that, and then eventually look for some bullish price action. But short term, definitely short to medium term, looking for longs on the pound US dollar, which does make sense against dollar weakness. All right, so on to the dollar Swiss, clearly in a downtrend. Now the daily chart is sitting at this low right here that was put in a while back here. So I do expect we'll see some sort of reaction off this area. Now, I think it'll probably just be a little dead cat bounce, or we'll just get price come down here. You know, we'll get some kind of bounce up here. Again, that might last for a day or two, and then we'll break lower. We do, and again, as I pointed out on a previous video, you know, we came up here, but we put in this higher low up here, this lower high, and pushed down again after breaking structure previously. You know, we went back up, again, fell a little short of this high, came back down again, then came up, fell a little short again of this high. So price is trying to push down. So I do expect to see this eventually break through, but you know, there will be a reaction off of this area. It's just natural. There's a lot of people that are short are going to have profit taking in this area. People that are trying to pick bottoms may try to just buy off of this area, and so that's going to push price higher. But in the end, it's all dependent on how strong that move is, and I think, you know, technically speaking, it probably will break through here. So I would just be patient and wait to see what price does when it gets to this area, and do we get a bounce and then a push back lower. I would expect that we probably will see something like that, maybe next week. All right. So that is the dollar Swiss. And then the last one, this is kind of a new one I'm looking at, is the euro yen. I wanted to have a euro pair, and the euro yen makes pretty good patterns. It's pretty solid technically. It's another yen pair, which I wasn't thrilled about. I already have the Swiss yen, dollar yen, but so be it. If the yen is acting as a neutral party, which it does a lot of times, then it's still a good pair to trade. So, but this is, you know, really in a sideways pattern. You can see going out to the daily, we've been ranging from between this low and basically up here since August. So we've been trading in this giant range on the daily chart for quite a while. So it's not ideal, but if you're going to play it, then just play it off the ranges. And in that case, we're moving higher right now. So, we'll see if we can continue to move higher. This doesn't look really appealing right now. I mean, even on the hourly chart, moving sideways here. So I'd like to see this kind of straighten out and get its footing. And I'm not a big fan of range trading, even on higher time frame zones like this. I just like to see this kind of stuff where it's just trending nicely. But I know some people like trading in between these ranges. It's just not something I've been a big fan of. So although I've added this pair to my watch list, you know, I would like to see it kind of break out of this zone eventually and go higher, so or lower. But again, if you are going to trade it on a shorter time frame, right now I would say you're probably looking at trading it long back towards these highs. Although, like I said, right now it doesn't look very appealing at all. We've basically been moving sideways the last couple of days. So, all right, so that's that on Forex. And we'll take a quick look now at futures. Lean hogs, I'm kind of sad I missed this one today, although it's still hung up at these lows, but we did rally back up here yesterday, and then today we did push down and retag these lows. But it's having trouble. You can see we've had now 1, 2, 3, 4, at least 4 touches on this zone. This was the low I traded earlier in the week from up here down to here. You remember that video from maybe 3 days ago? And we really haven't made any progress. We did correctively move back up, and then we dropped back today. But we only came back to this low again, and just having a hard time breaking through. But it probably, will give that level up eventually. It's not going to be today, but it probably will give up this level eventually and go down and start making new lows. So I'll keep an eye on this for entry. I didn't take this today, but there was a trade today, a little trade if you had caught this, down to here, but it's a real quick trade. It made one spike down and then it died out and it did nothing else. So if you did catch it, you would have had to have exited right at this lows to really have the trade worthwhile, because now you would just basically be, above those lows and giving back some of your profits. But I do expect to probably see this thing break lower next week, so we'll keep an eye on it. Natural gas, again, on the 4-hour time frame, seems to be the most reliable time frame to look at this on, because it's just real choppy on the shorter time frames. But anything beyond 4 hours gets a little messy. So probably around the 2 to 4 hour time frame, we're trading higher. As I did mention, though, we are up at these old highs right here. This wick from about 3 days ago or 2 days ago did break just above this high. So like I said, there's no guarantee just because it hits an all-time high that's going to automatically reject. It may just steam right through here. But I would like to see it take out this high. Now it is going up today, but before I think like this, that this high is not going to hold, I'd like to see this high taken out and then a little pullback and then see it go higher. Because if it rolls over from here, that is quite possible, because it would be at a contract high and there could be a lot of technical selling going on. So I'm not really keen on buying it at this level until it shows it can decisively break through this high. But I'm not ready to sell it yet either, because it's clearly, it's clearly in an uptrend. So we do have this zone. This was the last swing low that it made here on the hourly chart. So we'll see what happens here. We do have these little substructures, but I don't worry too much about these because I'm not trading on these real short time frames. I want to see these major substructure levels. So let's see if we can break this high up here. If not, then, if we come down here and take out this low, then perhaps we'll see a switch in direction. But never try to pick a top or a bottom, let the market tell you what it wants to do. So the only trade I'm currently in, you can see, is I did take a short, which is goes against what I just said about trading against the higher trend. This is on the DAX. And the reason why I took it, I'm probably looking at like a short-term trade, because you can see this is the hourly chart. We put in this high up here. We came down to this zone, and then we rallied back up here and failed to put in a new high. And that's really the first time I've seen that happen with this market, where it's failed to put in a new high after one of these pullbacks. I mean, you can just go back on the chart, just since back here even, this is only an hourly chart, and every time it's made a pullback, it's run up to new highs. And this is the first time we had a decent pullback and it did not make a new high. You can see this high right here is clearly lower than this one. So I decided to take a short off of here and just see. Now it may only come back down maybe to this more significant swing down here and then bounce. So if I decide to hold this trade, to be honest, I might put a take profit level, back at this level and just take a little short-term trade and be out of it. But I'll have to weigh that before the market closes today. But that's why I went into this, because again, this high right here, off this low right here, failed to put in a new high. And again, that's the first time we've seen that in this market, going back for many, many weeks. So that's what attracted me to the short. So we'll see what happens with that. But at least in the short term, I think there will be at least a bigger correction on this market. Not necessarily a reversal, but a bigger correction. And so that's why I primed and took this order. it's a low risk order. If it does bounce and goes higher, you can see my stop loss at that swing high. I'm fine with that. If it does go back up, then whatever. I'm perfectly accepting of that too. And then lastly on copper, copper has a big down move today. But again, on the 4-hour chart, we've got this zone sitting down here. So until if and when we take out this zone, then I just look at this as corrective. And copper can make some really big swings when it does correct. So, this is kind of the zone I'm looking at right here. So we'll see what happens with this. It's obviously not going to do much else today. But if we continue to push down, into here, if we take out this low, then I would expect, decisively and see a little retrace and then break, because watch out for fake outs, right? Where it comes down, throws a wick below here, sucks everybody in on to break out short, and then it turns and goes back. And as I mentioned earlier in the week, one of the ways you can help filter some of those falses, it doesn't always work, is to stick to looking at like a 30-minute to 1-hour chart. Because on a 15-minute chart or a 5-minute chart, you might see a big bearish candle close below here. And in your mind, you'll be like, oh, that's a breakout to the downside. But really, if you look at a little bit higher time frame, 30-minute to a 1-hour, you'll see that, yes, that 15-minute or that 5-minute bearish close is just going to look like a wick on a higher close, on a higher time frame if the next candle or two swings it back up into this zone, back up into the this level or higher. And so that breakout looks a lot less appealing because it's just going to look like a big wick. And people will say, well, is the breaker structure the wick or the body? That's a personal decision. Personally, I like to see the body close, although that doesn't always happen. Sometimes you'll get a wick break and the price will retrace, and then it'll keep going, right? It'll retrace a little bit, and then it'll keep going past that wick. But but a lot of times it can lead to a false breakout where you see that candle body, in this case a bearish candle, on a short time frame close outside this rectangle, like down here somewhere, and then the next candle or two it snaps right back and the uptrend continues, and that ended up just being a fake out in the liquidity grab to fake people into going short, and they scoop up all that liquidity, or they stop out people that are long, and then then they continue the uptrend. So so one way you can help filter that is to check the stuff on a little bit longer time frame. You don't have to go too high. 30-minute, 1-hour time frame I think is fine. Look for a candle body close decisively, like below this low right here, and might you miss an initial breakout because sometimes that wick does end up, or that candle body on the short time frame is decisive, or that wick on the higher time frame does point to a change in direction. So you might actually miss it once in a while, but it's okay. If you miss it, you miss it, right? Just go to the next one, or wait for the first pullback and then join the trend. I mean, if this is going to reverse and go lower, you've got a long way to the downside, right? So you don't have to rush into it. If you miss the initial breakout, fine. Let it retrace and then grab the next leg down. Okay, even if you do that on a shorter time frame. So, and I think you'd be fine. But like I said, you do have to respect the uptrend here, even though this looks really bearish. But it's not unusual. I mean, if you look at some of these previous pullbacks on this market, like this one, this was multiple candles, but it was still a very hefty pullback. You had this big move down right here, and this one had all kinds of fake outs. We had this fake out here, we had another one here, and then finally when it got down here, it finally turned and went back up. So this is kind of brutal, but this can happen, where you get these, especially this one right here. This looks like a total, continuation of an uptrend right here. Bullish momentum coming out of a wick, that took out as a previous zone. And, then price just came down and continued, made 3 more new lows before it finally turned around. And another fake out right here from this low, and then a fake out, and it went down, made another new low just below here, took out all the stop losses, and then finally it ran back up. So unfortunately, sometimes that's going to happen, and you just have to live with that and practice good risk management. But so I don't, even though this looks pretty bearish with these couple of candles here, I am not necessarily willing to throw in the the towel on the long here. Although again, as I pointed out, similar to natural gas, we did have this giant wick high, contract high back here. We did break that though with this candle and this wick from yesterday. From from yesterday would be this candle and this wick. So we'll see, but until a major structure level is broken, I'm not ready to throw in the towel, because just because it ran up to a contract high and wicked out doesn't mean it's not going to continue. It just means it's a little bit caution. And obviously, a lot of that is driven by the fact that, again, if you had people that were long up here, they all closed their positions, they took profit, so that generates a lot of selling. And maybe people trying to pick a top up here and selling into that. So that's going to drive this decline down. But it doesn't mean it's the end of it until we see really a change of the structure, which to me has to take out this low below the bottom of this rectangle pretty decisively before I would throw in the towel on the bull market. Because remember, this thing can really make a lot of big swings, So I wouldn't necessarily just forget about it and say, well, it's a bear market now. I'm not ready to say that. It could, but I'm not ready to say that. And again, I tend to look at these higher time frames, medium length overall. The 4 hour is kind of my time frame of choice for just analyzing the market. I might go down, I do go down to a shorter time frame to look at entries, between the 15-minute and the 1 hour, looking for entries. But that's only once I kind of see price come into an area that I'm interested in, where it's either a continuation potential or more of a confirmation of a reversal on the higher time frames. So then at that point, I will go down to the shorter time frames and look for my entries, set price alarms on my charts or whatever. So so that's it. All right, so that wraps it up for the week, guys. Overall, I had a good week. I had some areas I definitely could have done better on, but a green week's a green week, and I'll take it. I had green in futures and in Forex, so we'll move on from there. And next week's a new week, and I think things probably will remain pretty juicy, especially for the U.S. dollar, but everything going on here. So, and a lot of that spills over to these other markets. So, all right. So again, guys, smash the like button, subscribe to the channel. Questions, comments, leave them down below. And certainly we'll be back next week with some more. And I hope you enjoyed it. Take care. Have a great weekend. Talk to everybody soon.